Hello guys, so through this video I am targeting a specific concept inside section 115 BSE which I've seen that a lot of students misinterpret. Let me straight away get to the point. See, we all know very well that if our assessee happens to be an individual or HUF or AOP or BOY or AGP, then that assessee has two options. Either that assessee can compute total income and pay tax on the basis of the default regime, that is section 115 BSE, or that assessee can compute income and pay tax as per the optional regime, which is also called as a normal provisions, also called as a regular provisions. We also know by now that section 115 BSE is the default regime, right? Which means if the assessee does not opt out of 115 BSE, then we assume that by default he is following 115 BSE. So if the assessee wants to opt out of 115 BSE, assessee has to specifically mention there in his income tax return. So in his income tax return, he has to specifically mention if he wants to opt out of 115 BSE, and if he wants to follow the optional regime, he has to mention over here. Otherwise, by default, we assume he is following 115 BSE till here we know. But the whole question arises, can the assessee keep shifting? Can he keep shifting from here to here and then come back here and then go back here? Can he keep shifting? That is what our entire discussion now is all about. See, listen, can the assessee keep shifting? This entirely depends upon, does the assessee have PGBP income or does the assessee not have any PGBP income? If the assessee does not have PGBP income, then there are no restrictions. In that case, the assessee can keep shifting, absolutely no restriction. Like 1 year 115 BSE, another year regular provisions, again 115 BSE, again regular provisions. Like that, the assessee can keep on shifting to no limit, absolutely no restrictions, absolutely no problem. Alright, but however, if the assessee does have PGBP, this is where the whole discussion point is. If the assessee does have PGBP, then in that case, by default, assessee is following 115 BSE. If the assessee wants to opt out, yes, the assessee can opt out. If the assessee after opting out wants to come back, yes, he can come back. But however, remember, he can opt out only once. He can come back only once. Once he comes back, he has to stay here under 115 BSE. No ma'am, we did not understand. Give us an example. Listen to me. Let us take an example. Let's straight away understand with an example. Let's say in year 1, by default, what is my assessee going to follow? By default, he is going to follow 115 BSE, guys. But let us say in year 2, he decides to opt out, which means he decides to follow the normal provisions. Will you let him opt out? Will you let him opt out? Yes, you are allowed to opt out once, and he has opted out now. So year 2 he has opted out, he is following the normal provisions. Year 3 also he is staying under the normal provisions only. Year 4 also he is staying under the normal provisions only. Now year 5, this assessee wants to come back to 115 BSE. He feels in year 5 that 115 BSE will be more beneficial to him, so he wants to come back. See, how does the assessee decide whether the assessee wants to follow default regime or optional regime? How does the assessee decide which of the two should he follow? Whichever is more beneficial, whichever results in a lesser tax liability for him, that is what he will prefer. So let us say in year 5, assessee feels or assessees of the opinion that 115 BSE will be more beneficial for him. He wants to come back to 115 BSE. Will you allow? Yes, you will allow him to come back. He can come back to 115 BSE. So let us say in year 5, he has come back to 115 BSE. So he has opted out once and he has come back once. Now after he comes back, see, he left 115 BSE, he opted out of 115 BSE, and now he has come back to 115 BSE. Once he comes back to 115 BSE, now he does not have a choice. Now he has to forever stay under 115 BSE only. Because you are allowed to opt out once, you already opted out. You are allowed to come back once, you have already come back. Now that you've come back to 115 BSE, you cannot opt out again. You're understanding? Now your assessee has to stay within 115 BSE only. Forever, the assessee has to follow 115 BSE only. However, let us say in year 8, assessee does not have PGBP anymore. if this assessee stops having PGBP, then assessee is not falling in this category anymore, guys. If assessee is not having PGBP in year 8, let's say he's shut down his business, he shut down his profession, he is not carrying on his business or profession anymore, he is not having this head of income only anymore. Once he stops having PGBP, he will not fall in this bucket, guys. Once he stops having PGBP, now he falls under this bucket. And now that he falls under this bucket, now year 8 onwards, he can keep jumping again from here to there, no problem. Now again, he can keep shifting from here to there, any number of times. Are you getting the point? So my whole discussion here is that can the assessee keep shifting between the two regimes? It all depends upon, does the assessee have business income, professional income, or he doesn't have. If he doesn't have, then there are absolutely no restrictions, guys. Assessee can keep opting out and keep coming back, no limit on the number of times. You can do it how many ever number of times you want. But if assessee has PGBP, yes, you can opt out. Then yes, you can come back. But once you come back, you have to stay here only. But however, once you stop having PGBP, then yes, you can again start jumping. Understanding, everybody? So that is it with this video. Just wanted to give you a small revision on this point, which a lot of you seem to be misinterpreting. If there are other small points like this where you need any help, please let me know in the comment section below. Thank you, guys. Bye-bye.